네, 이어서 월가 트레이더 버니의 미국 주식 시간으로 돌아왔습니다. 오늘 이야기를 들어볼 것은 주식 소유권을 볼 수 있는 방법이 존재한다고 합니다. 우리 시장뿐만 아니라 미국에서도 어떤 주체가 이 종목을 샀고 팔았는지에 따라서 굉장히 그 흐름을 파악하는 게 중요하다고 하는데요. 어떤 방법이 있을지 지금 바로 만나보시죠.
Let's look at a couple of different ways that we can look at stock ownership in this whole move. We've just had this big price decline. We've gone down over 15% in the NASDAQ, maybe almost 20. We've gone down 10%, over 10% in the S&P. Let's think about who's buying and who's selling, okay? And what that really means, what we can infer about all that. Okay, so let's look at, and we've shown this chart before. This chart basically looks at insider transactions, so company insiders, chairmen, presidents, board of directors, significant members of management, upper levels of management. Are they buying their own stock? Okay, and what we saw coming out of COVID, oh boy, they bought their own stock big time. Okay, then we go along, and in this whole price decline, from the end of November, beginning of December, all the way now, they're not buying. Yet we've had big price declines. We've had stocks go down 70%. Why? I don't get it. I would think that they should be buying, okay? But now let's look at something else. Yet those same management people, okay, are using company funds to buy their own stocks back. Okay, they're not willing to do it themselves, but they're spending money, they're spending company money because the company's doing well enough, the company's not hurting, the company's still growing, the company's got good cash reserves, and they're using those cash reserves to buy the stock market, to buy their stocks back. Well, I get that, okay, I don't necessarily think that's the best thing to do. Personally, I think that if you've got a great business opportunity, pour all your money into the business opportunity. Don't buy your stock back. When you buy your stock back, what you do is you kick in incentive levels of management's compensation. Okay, so if we can get the stock up to certain levels, I can get paid a bigger bonus. Well, I think that's kind of bogus. I just don't like that. I think that if you've got a good business opportunity, go put your money into that business. Don't buy your stock back. And if you're going to buy your stock back and you're not doing it in your own account, well, what are you telling everybody? And I think this is something that is a bother to me. I don't get it. On top of that, okay, what we have, and we've shown it before time and time again, we've seen it in price declines, number of stocks below moving averages in terms of percentages, sectors that are getting really hurt price-wise, but we don't see the portfolios reflecting the sold-out balances in their accounts like their sentiment. In other words, in movements down here, okay, what we've seen, this red line, okay, reflects sentiment in the market, okay? We're clearly down here at very negative levels of sentiment in the market. That's great. The black line is a reflection of how aggressive their portfolio allocations are, how fully committed to the stock market they are, and how undercommitted to the stock market they are. Okay, at the end of 2009, we had nobody committed to the stock market. We were really concerned. And then the blue line is how much leverage we have within those portfolios. So when we have positive portfolio commitment to the market and leverage within those portfolios, they're very bullish. Okay, well, our portfolio leverage hasn't come off very much, and our portfolios aren't down here. I would love it to be down here. This is one reason I think we may have another attempt back at the lows, even though we have such negative sentiment now. I'd like to see an occurrence where we actually get people, just like we did in COVID, we get people to sell out. Maybe that's not going to happen this time, but I know that if they did sell out, on negative sentiment, that's a tremendous buying opportunity. So let's look at the same thing. Sentiment again is now green, okay, same thing, okay? And then their views on the economy, okay? The economy here at COVID, boy, we didn't know where things were going to go. We were stuck in our house, we were stuck in our apartment, we didn't drive, we didn't know how things were going to happen. And so we had a very, very negative view on the future. That was a market shock as opposed to a Fed-induced controlling inflation kind of a thing. But what we don't have is enough negative economic sentiment. You know, in other words, we still think the economy is going to be okay. Well, and it very well may. But if people thought the economy was not going to be okay and we had negative sentiment, boy, that would be a tremendous buying opportunity. Now, let's think about an occurrence, okay? Let's just step back and think about, because we've looked at our stock market and our economy. Let's look at an economy and a stock market that has that reflected in it. In other words, the economic sentiment is just as bad as the market sentiment. And for that, we'll go to China. China's got that zero COVID policy where they say that they don't want any COVID anywhere in the country, and they got 1.5 billion people, and they think they can control it, and they say they only have 5,000 COVID cases, and 5,000 COVID cases is too much. Well, the United States has better health care and all that, and we can't control COVID. I don't see how they could. But what we want to look at, we don't want to get into like opinions about all that. What we want to look at is that sentiment and the economic activity occurring at the same time. And what you've seen in this case right here is that money going into China through Hong Kong, constant positive numbers. And finally, we're starting to see redemptions. And these redemptions now are bigger than what we've had in the last 7 years. So people are selling the Chinese stock market. And when we look at the Chinese stock market and we compare it to the US stock market, we are seeing acceleration on the downside. So now that may be a buying opportunity. I'm not a Chinese stock market expert, but what I'm saying is that's a condition there where we see sentiment matching portfolio positioning. In our markets, we have sentiment negative, but we're not seeing the portfolio positioning reflecting that bearish sentiment. Here, we've got it. We've got redemptions going out. We've got a lot of concern, and we've got an acceleration on the downside in that stock market. So that's giving them attractive prices. Now, there's a lot more to go and think about with respect to China and the stock market. The point of this is an example of that occurrence happening. We don't quite have that now. Our market could still stabilize and do better, and we all have this positive view the economy is going to hang in there and not slow down significantly, and maybe that's true. I'm just saying that when those events do happen, they are buying opportunities. What we have to do is monitor how we go through all this now over the next, and I've always been saying 6 to 12 weeks, and it's now probably, I don't know, say 4 to 8 weeks that we need to watch and see where our economy goes, because I still think that based on what I know today, that we're probably going to have a decent rally going into the second half of the year.